And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, November the 28th, 2023. I'm going to start with the S&P and I'm going to start on the hourly chart. There's not a lot in terms of Elliott to update. The market remains in a fairly tight range that we've now been stuck in since last Wednesday. So starting tomorrow, we'll have been in a week of basically sideways to lower to sideways to higher moves. Intraday, it has presented, some decent opportunities to participate as a day trader or even a little bit of a swing trader. And that's been good as we await for what appears to be the figures that'll start, the economic data will start tomorrow. And just to give you a quick review and update on that, tomorrow we will be getting the GDP. And then that's really it. But we have a couple of Fed president, the Richmond Fed president, Cleveland Fed president will be speaking during the day. Fed Beige book comes out at 2 p.m. Eastern. So GDP 8:30 a.m. Eastern tomorrow. The larger group, and I think the more important that people are waiting for and are going to be looking, particularly in the treasury markets, they feel will give them more insight as to what the Fed will be looking to do or not do in the December meeting. And then also just in terms of all of the narrative that's now been out as to when the Fed will start to cut rates. Separate discussions, but on Thursday, we have initial jobless claims, and we have the ever important PCE index that'll be coming out, and then also Chicago Business Barometer and pending home sales. Those all are Thursday. On Friday, we continue to have, we have ISM manufacturing construction spending. We've got a lot of Fed people out there talking again on Friday. So Fed has been fairly busy with people, on the presidents, the governors, all going out, all on the stump to discuss their individual opinions of what the Fed and interest rates should or will be doing. Now, back to the S&P. We seem very clearly to be stuck in a range, which I thought today, I got to tell you, I thought today we could have gotten it done. Right there, I saw a nice rally, pretty much right from the 10 o'clock hour on up, and the market just gave us a really strong push to the upside, where we saw a lot of money coming in. Again, a little bit better distribution of it today, in terms of yesterday being really primarily Magnificent Seven. Today, a lot of it was in Apple, a lot of it was in Microsoft. So again, those stocks picking up some steam again today. Now, I have been leaving this open as to that we would know that the fourth wave, which is what I'm counting on an Elliott basis, would be complete if the market were to break above 45.80. Well, boy, it got close today. It got to 45.77. So it got within 3 points of succeedingly getting itself above there, but instead it found resistance, turned, and then dropped, heading then at that point getting to within about 4 points of the low. So in essence, what we're seeing is just a whole bunch of threes, third waves. Now, here's something I just kind of want to leave out there and toss out there, that a fifth wave may be in progress, and there's a very strong possibility that because it's a completing, that it's forming a diagonal. Very hard to see when you've only got 3 and 3. So what we would then look for is a third wave to catch. So you can see they started to kind of catch a little bit of a bid right going into the close, and then the after hour kind of got stuck a little bit. Still trading, but not moving dramatically right now. But if we can get that ABC as a third, right? We get the ABC1, ABC2, ABC3. We thrust up, get over this hump, and head towards that next resistance, which is 45.94 to 4,600. Now, if we can get a third to push itself above all of that, and maybe tomorrow's GDP might give that underneath support a little bit of lighting the fire, so to speak, yet to be seen. But I believe I'm still going to hold to eventually. I'm looking for the market, the S&P, to get itself up between 46.23 and 46.40 to complete the move. Now, on a seriously strong push, as we've discussed previously, we might get ourselves as high as 46.70. But again, that would have to take the numbers that are coming out, would have to be very defined and very clean and very directional in terms of what the Fed's next task is going to be. Are we going to leave this up in the air as the fact that the markets are just going to flounder around, or is it going to provide the next impetus for the buyers to just surge back in and move it again? Now, there's a lot of and one of the subscribers has also brought up the Wykoff method. And that's actually not bad, and I am familiar with it. It's just not something that I use, but it is, as an Elliott wave analyst, it can help to provide where are we within the scheme of things in terms of a first, a second, a third, a fourth, or a fifth wave. And they all fit with Wykoff in terms of what these different levels or what they actually say. So we have basically 4 phases. We have accumulation, markup, distribution, markdown. So let's just try to fit this in just a little bit. And this is very, very basic. Okay. So we've had some really strong rallies, and coming off of, let me just reset this. Let's go out to the 4-hour chart. I think we might be able to see it a little bit cleaner. So here we have accumulation, and this is this markup a little bit, accumulation and markup. We get a little bit of a pause, a correction, and then we go back in to another phase. So even if we're just taking it off of this mark, accumulation, accumulation, markup, and this is distribution. So we're not really making any new highs, we're not really making any new lows, but it's just distribution. I do believe that kind of fits the markup phase, really fits within a third wave, because that's what we see, and it can be very strong. That was accumulate. That was a very big accumulation day. Mark up, distribute. Then I think we have one more and a fifth wave that'll break and go higher. And then the whole cycle starts in the other direction, where we're going into mark down, where we see that the sellers are coming in. So just a thought. I am definitively not an expert on Wykoff. I'm familiar with it. And so I just brought it up for discussion here because I do believe that this is a period of distribution. And usually what can happen after such a strong period of like spreading it out is that you do get that one last shove. And it's usually within the fifth wave. So I would say in the direction of the trend, we're seeing a lot of distribution here. We get one last rally to put in that fifth wave, and then that's it. And the market turns, and you get what you consider a markdown. It just starts to sell as you move into the next phase. Now, I'm still looking for that. So let's go back to the Elliott. I can't definitively say because it's threes, as I just described. So off of that low, these are just threes. So we're stuck. So can I say definitively, well, wave 4, 45, 47 completed the whole deal. These are the fibs. Let's head up. No, I can't. This could be much more complex. and we get another wave down. So I leave everything in place in terms of that. Thus far, those downsides really have not materialized. They start, but usually from a higher level, and then are contained before they make new lows for the particular sequence, or just down past the previous low, which right now is 45.36. So we're not getting very far and sticking to a very tight channel. Moving averages are consistent with what the market is actually doing. 200 flat, 50 flat, 20 flat, 8 rising now with the market. So everything's falling into line. For tomorrow, again, GDP. We'll see what the reaction is off of GDP. If they like it and they want to go, then maybe that'll be the catalyst to get us back above 45.80, leaving that wave 4 in place, right where it is, and everything would be great. But if we get a strong enough decline going, or they don't like the number, it is not in line with what expectations were, that could be enough to drive the market down. This could be just a bounce, and this is like a 1 and a 2, and we're getting a 3, a 4, and a 5. So there's a possibility. And in actuality, it kind of would remain a fourth wave, because here's wave 1 all the way down here. So if we drop to 45.14, it's not really going to be unhealthy. In fact, I left these fibs up for that exact purpose. Now below 45.14, you start to kind of look at it, go like, well, now you really don't like it. And where do we drop from there that we begin to break into this zone from the 14th of November, which was just like, boom, that was a CPI number. I just kind of cruised up to there and then just continued. So we'd start to take back that level. So, but again, 45.14, I think it could be very healthy and just set us up for a stronger rally. And again, if we get this tomorrow, then what do we have? We have Thursday with some other strong economic data that could just reverse the whole pattern. So this is kind of how I'm going to leave this right now, that we have potential. A break above 45.80 should start to give a stronger signal, but it has to be a break and stay above. No more break, come back down, break, come back down. No, we get above it, and the market begins to build on that momentum. So if 45.80 is the level, then first resistance level above that, which I think could just provide a pause in terms of it being a part of the minute fifth wave, would be 45.94 to 4,600. Just because it's the big number and we have some fib resistance right there. I don't actually think that it's going to stop any stronger forward progression to build on a rally. So the first level that I'd be looking for to kind of put a cap on a minute fifth wave would be where minute 5 is equal to minute wave 1, and that's 46.23. I'm moving out here to where believe it's the minor 5 would be equal to, let me go one out. Hold on just 1 second. It would be, if we're taking it out to here, that's going to be where the C wave would be equal to the A wave at 46.40, I'm going to call it. So those is always a nice little range where it could fit, it could finish. That's a good area. If we get a strong enough push within the numbers and just the market decides it's going to go, our next level up would be 46.70, and we have additional at 47, 46, but those are pretty strong pushes within a fifth wave. And I would not be looking for that tomorrow unless they were just so stellar. GDP was just so like, holy crap, boom, you just start some squeezes and get it going. Now, wave C then would be 1.618 times the length of wave A, which is also acceptable and not out of the picture. That would bring us up to 48.16. So we still have some strong levels up above us that would fit with a minute fifth wave and everything else that would be completing up in that area. Downside, I think, should be limited right at this point because we are in a fourth wave. And so I have 45.39 and 45.14. Those remain in place. A break below 45.14 and maybe down even below 4,500 really starts to shift the narrative a little bit. Is it a 4? Are we done? What is going on up here? And it's all going to depend on the structure. So that's the S&P. Let's go take a look at the NASDAQ. And in the NASDAQ, it pretty much is the same story. Let me just open that. I'm leaving all the numbers up there. And I should actually start to, let's clean up this one a little bit. Too much sitting on the screen. That, and that can come off. And I'm going to leave it there because it just hasn't worked beyond that. And if we're still in this fourth wave and it is pretty shallow, we have 15,906, and that we were hitting on the 21st of November, so last week. And then we got a decent rally up. Now that was a spike. So remember that I went over and I went to a line chart, and we see how that all goes away. So it really, even on a 4-hour chart, A, B, C, and then we're getting threes. So is it ABC B? Oh, we got a C wave coming down. So these are possibilities. They still kind of hang out there. We don't have definitive answers yet. What we're getting is a lot of threes, threes and threes and threes all over the place, which kind of like tells you triangle pattern possible. So therefore, I kind of put in a channel line or a trend line and connected our highs. And you can see even as we go into the close, we're kind of like not able to break back above 16,073. So this fib level has basically held the market, even though there it did hold. It zipped above, but came back below, zipped above, came back below, hung around, dropped. Went up to it, went up through it, came back down, went up to it, came back down, went back up to it. So it's not able to really break above this level for whatever its reason is, but it continues to suggest that this fourth wave is still in progress. So I leave it open. This 3, this 3, this is a 3. So we got to start looking, well, so is this. So is this. We got a lot of threes when we break them down. So same deal. You can apply the Wykoff method here as well, the distribution. And that's, I think, the period that we're in. We're seeing a lot of distribution. And also interesting things that I want to also just kind of bring in, that what truly, now this is from another friend, sent this piece of news to me. And it is very interesting in that we're talking about the S&P 500. And really what it kind of comes down to is that, well, what really controls the S&P 500? And when we look at the numbers, the S&P, or you can say the S&P 7, which is the Magnificent Seven, there's the 7 largest tech stocks in the S&P, and they're up 80% in 2023. So when you're looking at 7 stocks out of 500 have got that index up 80%. So meanwhile, the S&P 493, which is the balance, right? Those are just up 4%. So, and this is, these are the facts. You can go work this out yourself. This is not something being made up. And it's via the Kobesi. I'm going to see if I'm pronouncing their name correctly. They put out a letter, and they're the ones that are stating it. So they keep the data. So It's just interesting. It's just very, very interesting that a few key stocks have essentially become the entire market. That's the same in the NASDAQ, folks. That's the same. When those 7 get going, when Apple and Nvidia and Microsoft, if they start jumping, so goes the NASDAQ. Even if they're selling the other markets, those guys they're being purchased. The NASDAQ will just go counter and just go up. So we're in a very, very interesting time right now and trying to determine, is the market bullish? Well, I don't know. 7 stocks are, and that's what's controlling it. Kind of like a very strange. So when we're seeing this accumulation distribution, it happens to be in those primarily in those 7 stocks. So it just becomes really wild. Really wild. And a lot of the auxiliary companies that get attached due to what they produce. So again, back to the NASDAQ, a lot of 3s. This is it's just all 3s, all the way up, all the way down. So here we are. Is this a triangle pattern? It could be. Now, what would the resolution of the triangle pattern be that we're going to come down and we spike up and out? Now, that would fit because I'm looking for this wave 4. So what it could be, a triangle within a possible triangle. And that's when it gets really interesting. When you're doing A, B, C, D, E, and maybe E forms its own triangle to complete the whole shebang. Now, if that is the case, then we should thrust up and out of this whole mess, since we are still looking for a 5th wave up, a minute 5th wave, still looking for it. But can I say definitively, it looks pretty good. I will say it looks pretty good going into the close. The NASDAQ is the one that had a lot of buy-in come in right in that last few minutes and just kind of push this thing heading back towards that 16,073. Now, overnight, still got to get all that in. And then tomorrow morning, we get GDP. What can happen? I don't know. We'll have to wait and see. But my expectations, even if the market finishes this as all 3s and it comes in and drops down, we have additional support. First of all, we do have additional support right here at 15,911, 910. We have support at 15,938 just because it's the prior low. And so far, twice today, it held. Got a little challenge, but it held nicely. And if we break, we have that, like I said, at 910. And then it starts to kind of thin out a little bit. We have some additional at 816. Stronger doesn't really, the 236. The 236, folks, does not come into 15,695. This whole wave 4 has been held higher and just barely on 146, maybe. I mean, I don't even use that number anymore, but it is a fib. So it's being held. So I would be expecting we're going to go. And when we go, it should not be a problem for the market to get up into this zone or even this area. I think there's a lot of pent up buy energy that's going to swirl around these numbers, particularly on Thursday. So it's going to be an interesting trading day because, I have my own thoughts about how would you trade it. And if all of this pent up energy is there and that number is going to become acceptable to the market. Now, I'm not talking about the absolute first reaction. I'm talking about the one and the follow-up and the follow-up that just got to keep push, as we have seen, for example, here. Did not stop. How we see other numbers where it just gets good and it goes, not the ones that go and then die. No, I'm talking about you get that follow through. And that's what could go and just really kind of, because the market's convinced, the algorithms are convinced. This is how they've all been programmed. They're reacting to the news. and the better that that those numbers would come out in terms of inflation being under control, in terms of the Fed cutting versus hiking, you're going to see a lot of that re-entry. Again, that re-entry. Now, how much is still left out there for the market to just keep boosting itself against the backdrop of everything else that we have to live through? Yet to be seen. But could it jump 300-400 points? Yeah, it could. It could easily. Could it be a finishing move? Absolutely, it could be a finishing move. But we got to be there. We got to see it. We got to see what happens. So how I leave it is exactly the same as how I've been leaving it thus far, in that, well, we need to see that break first above 16,073 and close. So like an hourly bar, close above it to give us that oomph, that lift. And then 16,122 would be next up. We got to get above it. We got to have some bars close above it and then start to head up to 16,275, 16,327. That's a little bit of a cluster right there, just a couple. And then we have 16,482, 83. We have additional, by the way. On a really serious, we love that number, Fed's all done, blah, blah, blah narrative. Could it get up to 16,819? Sure. Is it going to happen this week? That would be pretty strong, but do you ever say never? I don't, not anymore. All right, so I'm going to kind of finish it there. Again, tomorrow we will see what the numbers bring, what my expectation are. Downside, I just gave you. Those are all the support levels. Getting down here, I think would be a pretty severe drop. It would not take out any markers to say we're done. If we had to, then that high, as sloppy as it was, would be 5. This would be 4. That would be 5. And this would all be start as something. 1, 2, boom. Maybe. Again, everything can be worked out, but it's not necessarily what I'm looking for. I'm still looking for a move up. That's where I'm going to leave it. Next update will be on Wednesday, November the 29th.